that sound means we are now live here on our YouTube channel. It is our halftime report, Tackle Trading's daily show, where we go through the markets one step at a time, looking at charts, technical analysis, trends, economic data, any news that's grabbing our attention, corporate earnings, whatever it might be that we think is important, relevant for that day's market trading, and break it all down so you guys can better run your daily routine. Welcome back to our community. It is Friday in a volatile trading week. Markets are finding some support here, trying to create a technical bounce. I've got Frank and Matt here with me. Matt, how are you doing today, sir?
You know, Tim, I'm doing absolutely fantastic. I'm excited to be here. A lot of earnings and a very important technical event happening, testing some, I don't want to say major support, but testing some fairly important support, a little bit of a important technical moment in time, I would say, for the marketplace. But, you know, like we've said in recent history on sell-offs, what you want to see, this is the beginning of what you want to see. We'll see if we can get some follow through, but at least on a Friday, you're getting a little reprieve from the sell-off this week.
And Frankie, how are you doing today, sir? Back
doing
on
well.
a Friday as always.
Always exciting. Always look forward to Fridays. They don't call them fun day for no reasons, but yeah, I mean, excited to be here with the team. Been an interesting week in the market, right? We've seen a lot of movement, a little more volatility than maybe we've been used to, which isn't necessarily a bad thing, but you can get lulled to sleep a little bit, right?
Yeah, you absolutely can. And then we have had
wake
some
you up real fast, though.
Oh yeah, it's like a glass of cold water if you needed it right in the face.
That's exactly
100%.
Right. That's exactly right. As I'm watching the chat, we got a lot of energy, a lot of good positive vibes coming in here. If you are Team Tackle, hashtag Team Tackle right in the chat whenever we start our show. And I saw a couple people saying they're new here today. Anthony, welcome. Brand new people to our community here. Make sure you click subscribe, click the bell, come back and join us on a daily basis. Let's get right down to it here, guys. Technical analysis first here. We'll talk news in just a minute, Matt. Yep. What are you seeing in the chart?
Well, number one, I think your eyes always go back to something that this type of price movement reminds you of. And I'm looking at this just very quickly in recent history, this little test we had of the 50-day moving average. And, you know, like I said earlier this week, anytime the market starts increasing the volatility, obviously that's fear building in the marketplace to a certain extent. And the fear is obviously building a little bit, and I want to be clear on that, a little bit. And like I said, with when we were talking in the pre-production show, we were looking at some of the precious metals out there, and we were looking at copper, and I said it's hard to see the world ending when copper's doing this, right? It's just so I get the fear is building a little bit, but once again, when you got energy doing that, and when you got communications holding up really, really well, and when you have, you know, not energy, but industrials breaking out and testing the little bit of Cody's special here, snapback test of the breakout channel, when you have finance, you know, showing, you know, momentum in trend and, you know, kissing off a rising 90 MA moving average with a hammer candle, I think we should put a little bit of put a little stop loss on that end of the world conversation that I've been hearing a little bit in the financial world this week. All we're doing right now, in my opinion, is we're simply testing support levels. That's all we're doing. We're testing support levels. Yeah, there's always going to be areas of the market that are a little bit more volatile in these conditions, aggressive areas, high flying stocks, you know, those types of things that are fundamentally disconnected from reality, quite frankly. And that's always going to see a little bit of increase in volatility. And so that does add to the overall mindset of fear building in the marketplace, the concern building in the market a little bit here as well. But again, we have yet to break the 50-day moving average. And last time we did this little song and dance routine, right? This little two-step routine we did over here. Down, up, down, up. Down, up, down, up. Test the 50-day moving average, test the 50-day moving average, hammer candle coming off of it, hammer candle coming off of it. And no, you're not out of the woodworks yet. We said it's a little bit of a reprieve from the volatility, but it's what you want to see. And when you look at, and when you're looking at this on a 30-minute chart, discount this a little bit. That got caught up in the volatility and got gobbled up right, you know, very aggressive at the cash open. But where did it come into? The same type of price performance you came into. And we talked about this, you know, literally on Monday when I said this could be the low of the week. And when you're looking at this and you're coming into those same levels of candles, you got a double bottom, you got a double top, and you're fighting for a breakout of that neutrality on the intraday, that is the concept of slowing momentum. And so again, I do have to say this, Tim, and you've heard me say this many times technically. Slowing bearish momentum is not an indication of bullish momentum. It's just an indication of bearish slowing momentum. That's all it is, right? You want to see that next movement to the upside on the intraday chart before you're like, yeah, bulls now have control. Bulls don't have control on the price yet. This is a little bit of a slowing momentum. We're coming into the weekend. It's been a tough week. You know, it's kind of like we just want Monday to come already. Just give us Monday already. But we're seeing the slowing of the bearish momentum here today. You're seeing it contract a little bit. Now we got to see the price action above these levels start to be a little bit more consistent. And maybe we see that on Sunday night on the futures open coming into the cash open on Monday. I think this is very constructive. If you wanted to, if we're going to have a decent week trading next week, you needed to, next week starts with today. Starts with today. Because if this candle doesn't hold today and we do come under the 50, you've blown out of the water a ton of technical patterns that you might not know about yet. But I'm telling you, Frank does, I do, because we've done some scanning here today for the weekend reports. And there's some really good technical patterns, but it really it's about this level holding, because if this level doesn't hold, those technical patterns are now violated support, or those technical patterns are no longer in those flag-based patterns, or those technical patterns are no longer in standard bullish retracements. The violated support levels of that, and at that point, you're going to need a little bit more time to set up. And so if you're anticipating next week being a fairly decent trading week, you're getting what you need, at least to start here on a Friday. You're getting what you need.
Frankie, what is your thoughts on tech?
Yeah, I mean, I pretty much agree with Maddie right there. I mean, you know, pretty much as I was going through my scans, all the things I liked felt like they need at least one more day. You know, I don't see, you know, for at least how I like to do things, I don't see Monday being a heavy trigger day for me. I mean, you never know, right? We'll see where we go, but
we'll see where we end up.
Definitely stood out to me. It felt like a lot of things that could be, you know, little, like Maddie said, little flags pulling back into the 9, but have not even started to really see a ton of slowing momentum on the intraday just yet. So it feels like, to me, this is, like Maddie said, the start. Need probably a little bit of time to get, at least broadly speaking, some of these, you know, to really develop the way that, you know, the textbook way, if you will.
Well, and honestly, Frankie, I mean, that's what's going to start here on that intraday chart in the S&P 500, is if you are going to have that, you know, maybe it's Monday, maybe it's Tuesday. I'm just talking about that next week as a trading week.
Right.
But this is what you definitely want to see. You want to see that slowing momentum. You want to see support start to build. And right here, you only believe this is support right here because you're testing this level over here. You think it's going to act as support, but it hasn't confirmed as support yet.
Correct.
With the upward movement in price and then the retest over here, you now have that as confirmation, as a support level that you can start identifying from a technical perspective. You see that same conversation over here at the double top, triple top, quad top, and now you're fighting for that breakout. And once you see that breakout on the intraday and you start to see a little bit of higher high, higher low, more consistency to the top side, I guarantee you're going to see a lot of those retracements that you've started to see build in energy as you see these downward movement in price, as you see this downward movement in price in industrials, as you see this downward movement in price in financials, as you see these downward movement in prices in some of the better areas of the market, you're going to start to see that form these levels of support, and perhaps get some triggers in energy, and perhaps get some triggers in industrial, and perhaps get some triggers in finance here. Whereas you're basically waiting for the NASDAQ to settle down and stop throwing a temper tantrum.
Yeah, and obviously that NASDAQ is having the biggest bounce back today, but it also had the biggest weakness yesterday.
It's down 7% off the highs. So, you know, you're down 7% off the highs, you're going to bounce back harder. The same way, if you're up 100%, you're going to get hit harder. It's 2 + 2.
In terms of corporate news today, most of it is around the earnings front. I do want to get to corporate earnings here in a little bit, but I do want to flash through the commodities as well. We're seeing action across many different areas in these markets, and metals. I'm seeing gold.
Well, before we get into commodities very quickly, Tim, I do want to talk to Frank and you a little bit about the sectors as we're going through the S&P 500. As we come into our Friday afternoon, obviously after the halftime report, our afternoon is chock full of basically, meeting with all the coaches and assessing and analyzing the S&P, the sectors, the commodities, the currencies out there. Obviously with a hot and heavy week like we did this week in terms of volatility and news, you're going to have some updates in your rankings, both on an upgrade and obviously a downgrading perspective. Last week in the market, we finished the S&P right there at the 20-yard marker. You're most likely going to see some degree of downgrade, obviously not into neutrality, but you'll probably see a 5-point downgrade in the S&P as a whole to account for the important test of the 50-day moving average, as well as to account for the increasing volatility, specifically in the NASDAQ and some of the underbelly of the marketplace. So you're most likely going to see a 5-point downgrade here, but I do look forward to the conversation with Frank and the other coaches. Obviously, we don't rank all of the indexes, but the NASDAQ specifically, when you're talking about some of our highest ranked sectors at Tackle Trading, coming into this week, you were talking about discretionary and technology. Those were our two hottest areas of the market from a trending and a pattern perspective. Clipping the 20-day moving average this week, you're going to see a downgrade in the NASDAQ. You're most likely going to, and I'm looking at technology. Technology has held up a little bit more than the NASDAQ has, but because of the weakness in the NASDAQ, you'll most likely see a 5-point, maybe even a 10-point downgrade because of the weakness in the NASDAQ. However, in discretionary here, very similar to the NASDAQ, you now have some degree of double top, double bottom, perhaps a violation of that. This, to me, is a little bit more concerning than specifically the technology area of the marketplace. So I expect a downgrade in this area, discretionary area. Communication, another very, very hot area of the market recently. I actually think communication, in the bloodbath and I don't even want to call it a bloodbath because I don't think it was that this week. I just don't. It wasn't broad based. We had, like I said yesterday, we were meeting yesterday after the halftime report, and I said, guys, it's one day of a bloodbath, but it's not 1 week. So can it turn into that? Certainly, but let's not overreact to this. Let's not overreact. Communications, outside of that one day yesterday, they didn't get caught up in this hoopla of the volatility this week. It held its 20-day moving average very well. I expect that 20 ranking to be to really kind of maintain that ranking coming into next week. We'll see the conversation later on, but communications with the playing the defense it did in the face of the volatility, I think that's actually fairly impressive. So we'll most likely keep the ranking F communications right there at 20. What's going to be interesting, Frankie, and where we're looking at these areas of the market that we had upgraded fairly aggressively over the last couple months, but really that the financial area, the basic material, the energy, industrials, but specifically the finance and the energy areas, they're going to be interesting from a conversation perspective, given the fact that finance was at a 20, energy was at a 25. They were our fourth and our fifth highest rated sectors, but they are the best trending areas of the market. They're the most consistent areas of the market. And even though from a charting perspective, they still have a lot of catch up to make, they are certainly stronger than some of those areas, including communications. So Frankie, obviously, I think we're going to see finance and energy be two of the higher rated sectors at Tackle Trading.
I definitely agree.
And where's your head at there?
Those are that energy, finance, and industrials too. I would put them there personally.
I personally would too, not from a technical perspective, but I would from a psychology perspective.
Right. So I it's one of those that you'll have the conversation. My instincts, like the setup, like the movement that we've seen, my instincts, is upgrade. That's kind of where my head would be right out of the gates. I think, if we have the conversation, about, broad volatility and maintenance could make some sense. I can't imagine a downgrade personally.
No.
I think
there's no downgrade.
I think it'll be one of those fights. And these are the areas that are, really, shaping up. It doesn't look like, we got work to do, but based off of that, low on energy today, everything fired back. It really fired back.
If anybody seeks to downgrade energy or finance in our scattering report meeting, they're not going to be on content next week. So you guys will all know.
I hope they're not watching. I hope they're not watching.
That is not happening. So. There is no downgrades happening in finance or energy next week. I'm just saying. Make your arguments if you want, coaches, but it's not happening.
But yeah.
So we'll see.
No, but
go ahead, Frankie.
They're very interesting spots. And so we are getting some really nice areas. When I kind of think about, what Monday morning looks like, right? Because I'm always, I try to kind of visualize what it looks like, right? I need a doji. I need a couple of days, need some time to cook. Everyone's heard me say those things a million times. Energy in particular feels like if we start up on Monday, that's probably the area that jumps out to me the most for new potential entries with where everything's are. But yeah, those three areas I would anticipate being, my favorite places in the market, and probably most of the other coaches as well.
Especially with the snapback on energy here today. What an impressive rally coming off the low point here today. Nice hammer candle. First real, test of volatility here on energy, and at least one day you got to say it passed the test, right? Yeah. It got punched in the face and it responded very aggressively. So you gotta appreciate that a little bit about energy. Finance, similar conversation. Test the low. I do think the futures market on Sunday is going to be a little bit more important than typically, given the fact that, we do have some major tests happening in the NASDAQ, specifically the S&P, and no. Saying this is what you want to see does not mean, hey, listen, let's go trigger everything right now. This is the starting point, right? The gun went off and this is the starting point. Let's see how the races run. But we do have some very important tests happening at those support levels. And obviously a nasty futures open on Sunday would throw a very big wrench into a lot of the technical analysis coming into next week. So keep an eye on that futures market. And obviously the close coming in today will play a role in that. But as of right now, this is what you definitely want to see in the marketplace.
As a trader, I like volatility. Obviously, you can't have things just doji all the way.
You don't like this week. I don't care. Those are trigger points for me. I get it. Finish.
No, I like volatility in general, but what I think is very, very important for this market right now is a constructive close to the end of this day. And then also over the weekend, having some kind of constructive open for Monday. Because if you're just going to have this crazy all the way through the weekend, that could be very bad for Monday open.
And I want to be very clear. When a trader says they love volatility, I think they're lying. Full stop. I think they're fundamentally lying. They don't like volatility. Nobody loves volatility. Everybody gets scared. Just look at the headlines this week coming out of Wall Street. Everybody gets scared. So I don't think they like the volatility. I don't think anybody likes random technical analysis that gets absolutely blown out of the water and you can't get a consistent read. When you say you like volatility, what really is being said is you just like a lot of speed to the upside. And that is a vastly different concept.
Yeah, that's fair. Obviously we are getting other price action movements in commodities as well. From a broad market perspective, you guys broke down the sectors, the indexes here. You got anything else before we go into commodities and start looking at gold, metals, the others?
Nope. Good.
Okay. Let's take a look at oil. Let's take a look at the metals market. Gold is a significant chart here today. Let's take a peek at it. Obviously tied to the whole theme around energy. We had a podcast on Monday, this last Monday on Trading Justice around the sector of energy and why we liked it, why we thought it was a great theme coming into the week. You guys with the upgrade, I believe we will end up doing that. And a lot of that based on crude oil here. And it's been constructive this week. We've still had a good week above the 9. Red candle right here. Matt, what are you seeing in this chart?
I'm seeing a little bit of slowing momentum in the chart in general, and I'm seeing a little bit of volatility certainly pick up as that chart is starting to turn over a little bit, and that's all that's seen. When you're looking at this type of movement, then you start to see a little bit of rounding. That's just a little bit of slowing momentum. You see this type of price movement, then you get an up down, up down, up down, up down. You're seeing a little bit of volatility shift here, and for me, the entire analysis on crude oil is not a triggering analysis, seeing if we can get a good little pop there to 65 or 70. To me, the analysis on crude oil is stabilization above $50. And honestly, that is the only thing I care about.
And obviously, we've got a very constructive bullish chart to create.
And I just don't think, well, yes, but you don't have a good technical handle right now to get a good directional trade.
No.
So with a lot of the people focusing on energy, the entire market focusing on energy right now, it's more about the stabilization of oil and how that impacts the profitability of energy companies. And so I'm not like, I don't care about the daily action on oil. It's not a tradable instrument for me specifically, but for me, it is about the stabilization argument. And as of right now, there has been nothing out of Saudi Arabia, nothing out of OPEC, nothing out of supply and demand that has truly impacted that argument for oil right now.
Frank, anything you're seeing in that chart you want to add to it?
Yeah, I mean, very natural to need to take a breather, right? Can't go straight up. I mean, eventually you run out of gas. And we do have some old history in that 64, 65 range. So, kind of makes a little sense that would be a natural profit taking place. I agree with Matt. Today, there doesn't appear to be a great setup, on this, but I would expect to, watch for some development. I'll probably, with Matt, and, everyone knows this about me, I've really been, on the energy stocks and not crude oil bandwagon. Should have been on both, obviously.
And the way I see it, Frankie, is just very simple. I mean, how much more appreciation do you think you can get on oil here? Like how much more do you think until those headlines start coming at us of XYZ country opening up the pipelines to take advantage of the price of oil? I see this happening more and more and more. And so I don't think you're going to get a great directional trading environment like you had on the consolidation breakout. Now you're just in a different environment, in my opinion. And so yes, the trend has momentum. There's no doubt about that. What I'm suggesting, you're seeing a little bit of shifting momentum towards the top end of the trend. And as you start getting into these historically known resistance levels, very important resistance levels at 65, that to me is okay. The directional journey, although very impressive, again, kind of seems like it's turning over a little bit at some very key levels of resistance. And no, that is not concerning for me in any capacity. Not at all. I don't care about it. If it goes down to 57, I could care less.
Yeah, even into the mid 50s. Yeah.
Oil's going to stabilize and it's going to have wide range neutrality. We just don't know exactly what those ranges are.
Where those ranges will end up developing. Yep. That's exactly right. We got to let that play itself out.
But again, I think the bigger argument and the argument that this is very important for is that economy reopening up argument.
Right.
Yeah.
This and copper, by the way.
And copper's got a nice little pullback developing right now.
Oh, Dr. Copper. Oh, yeah. Dr. Copper's nice little pullback. Obviously, you never start something with, okay, let's kiss off that 9 and let's just market order right there against that type of volatility. No, of course not. But this is what, again, you want to see. When you're overextended, you want to see an orderly pullback. And then Marty's jumping here. He's bouncing. We just don't know where the trap is yet. Could it be at 4? Could it be at the 9? Could it come all the way down to 385? We don't know. You never buy in the face of that. That gets you excited for the potential doji upward movement in price. And so copper could have a good trade on it, unlike gold, which we'll talk about next. But copper could have a good trade on it, maybe on Tuesday, maybe on Wednesday, maybe on Thursday, but definitely keep an eye on copper next week.
Yeah, the other metal we got to look at is gold. It is breaking down here today. Had a rough stretch.
It was in the corner.
It was
in the corner, and it couldn't get out of the corner.
It got rocked.
Tyson bit its ear off. It just got ugly. It just got ugly.
Get up, Rocky. Get up off
Rocky.
By
Dude,
the way,
you
I
can't
just have
call
to.
gold Rocky right now. Rocky gets up. Gold hasn't gotten up yet.
Hasn't got up yet. And I do have to say, I'm a bit disappointed in you, Tim. I was listening the other day, and you couldn't remember Mick from Rocky. You couldn't remember his name. I mean, I won't go
Definitely.
too far. I was
Team Tackle
disappointed.
had my back. Team Tackle had my back. They helped me out. Your
Yeah.
disappointment is noted, though, for
Be
sure.
be disappointed in Tim and not me. I couldn't remember his name either.
Well, Tim fessed up to it.
Yeah, Tim, what's wrong with you?
What are we doing with gold here, though, guys?
Nothing.
Long-term
Nothing.
investors do nothing, right? But where is support? Where's the next support?
Well, we had it ranked at -40 last week. I remember this one. Tyler was on the halftime report right here. He's like, yeah, you got to be happy a little bit with the gold reprieve. I'm like, I'm not happy. Are you kidding me? You came into massive resistance levels on a downward movement in price. That's not good. It got punched. It kept getting punched. Couldn't get out of the corner. And I said yesterday, a violation of support is you never want to say it's going to happen, but it's likely. And you never know if it's going to happen today or tomorrow or the next day. But the next level of support isn't really since you violated this right here at 1760. You got to come down into the neutrality of the bottom as the range between 1685 and 1680 and 1675. And even at that, that's not going to stop if it continues to do this. But the beautiful thing is when this happens, it will be overextended, and you could certainly see buyers come back in down here. Who will those buyers be? I don't know. I don't think it's going to be many people at Tackle.
No.
Probably not me. So that's a pretty ugly chart.
It's nasty.
And what about 1680, 1675 is where you guys have the next?
I think so, Frankie. Over here, old support right there is 1675. You got some chop up into 1680. You're looking at that level as the door that stops this, but.
Yeah,
we'll
or
see.
at least something that, stop might be a bold stretch, right?
We'll see if Holdo can step up. Can we get a Game of Thrones Holdo on gold? Can we get that? Can we get some diamond hands on gold here, guys?
Gold is the original Holdo.
Can we get some laser beam eyes? Is that what it is? I have diamond skin, laser beam eyes, and whatever. I got frog skin on gold. I've been around this market too long.
Mm-hmm. I don't know what all those things are.
Lizard skin. Lizard skin. I got lizard skin. It's tough and gruff.
Yeah.
Chris in the chat, Matt just says, long-term holders be worried?
Long-term holders should not. Okay. No. Long-term holders should never worry about their gold position because their gold is covering many different things in their portfolio. And so, no, I would not be concerned with downward movements in price as a long-term investor in gold. These things happen on gold. I wouldn't be concerned as a long-term investor. Short-term, yeah, short-term is garbage. But again, long-term, you're thinking 10 years from now. Short-term, you're thinking 10 days from now.
Mm-hmm, mm-hmm. By the way, there is a big bounce in the dollar.
Quite frankly, long-term holders will be looking as the gold goes lower to dollar cost average in.
Yeah, that's exactly
100%.
Right. Yeah, that's right.
And that is the answer right there. Long-term holders, if your philosophy is based on fundamentals and behaviors, you will be looking to dollar cost average as you test key support levels on the downside.
Mm-hmm, mm-hmm. I do want to get into earnings roundup here in just a few minutes. So let's quickly pick at the dollar. Pretty good rally actually today. And then Bitcoin on a nice little retracement as well. We'll get Frank's technical read. Matt, what are you seeing in the dollar first?
I don't care.
That's fair. You're joining me. You know me. The dollar's in a range, and I'm not really concerned about it. So
I don't know. Somebody better than me at technicals economics can get a better read on the dollar. I can't.
Yeah.
You're in a historic race to the bottom here. A historic race to the bottom. Something that we have yet to experience in human history. You're seeing an entire system. I don't even want to go tinfoil hat today. I'm happy on a Friday. We're gonna move on.
That's a Monday topic.
Yeah, that's a Monday talk.
Dollars bouncing back into a range. Let's move past it. Bitcoin, though, I got to tell you, this is a very interesting technical development that we've had here, Frank. For a long time, you just went up, 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 up. Now you're finally getting a little bit of a pullback here. Not just a little bit, but a pullback here. What are you seeing here, Frank?
Yeah, I mean, it's always the first, after you have that huge jump in momentum like we've seen, and that first, deeper pullback, that obviously I'm not saying it's bearish, but that's always something I'm not a huge fan of. I like the trade after that. Personally, that first break of that 9 EMA on the pullback just shifts, shows a little less momentum, right? Is all. So again, certainly not a bearish argument. I think that chart needs work if you're looking to technically play that retracement. The area might make some sense, and I think you could make a good case that holding that 20 and that old, little, chunk of 3-day candles before he broke out last time. But these are the type of charts that, for me, and I'm just saying for me, I'm not a huge fan of, I guess is the way to put it. That first violation of the 9, that next swing, I kind of expect the swing to stall out and then try to do another swing, if that makes any sense.
Maddie, anything to add on Bitcoin here?
No, I mean, obviously we're all looking at this support level as it's testing the 20-day moving average, which coincides with a little bit of a double bottom at 43,900. That's been tested multiple times, but you're looking at that level not as a buyer. You're looking at that level saying, please, for the love of all things holy, hold. But it triggered, like, even at 50,000, there's no trigger there. You've tested multiple times above that level, have not gotten anything to be sustainable above that level. That's thrown the intraday analysis, because of the lack of consistency on those tests above 50,000. That's thrown that intraday analysis into a little bit of a loop, trying to figure out exactly where it's going to go. All of that means it needs more time in the cooker.
Yeah, I mean, the trend's still rock solid, right? I think.
Oh,
it's
yeah,
just,
yeah. I'm talking about price action this week and the intraday stuff. The
Right.
trend's still intact, and that's why I said, you're not looking at these levels as buyers. You're looking at these levels. That's where the holder comes in. Like, that's where you call your buddy, like, hold
the line,
hold, right? Yeah. So that's what you want there. But no, you're just picking up the big britches there a little bit. You're not looking to take action there.
Yeah, if we could develop a little consistency in the several days ahead, could be interesting for sure.
If William Wallace met Ragnar Lothbrok,
hold. Yes. What weapon of choice are they carrying for Bitcoin, though?
What weapon would they carry in the
battle? Yeah, because gold's a sword.
That's a great question.
I mean, digital tokens they can throw at each other.
Maybe
I think like a laser,
laser eyes, Superman.
Laser
so they're all okay. So we're thinking about a war like Vikings, and they're like Marvel.
Yeah, Vikings of the future.
Right. Like, they're Iron Man, and they're like, dude, you got a sword. I got laser beams. Okay, I got it.
All right. Let's move into stock talk here next on a Friday. Yep. We got a big earnings roundup, Matt. I know there's a lot of
earnings today
in there.
Lot of earnings today. And yes, this is going to be the definition of rapid fire from an earnings perspective, guys. I got a lot I'm going to go through very quickly. Just and quite frankly, like I said, when it comes to earnings season, I'm going to update everybody on very important earnings. I'm going to update people on important tackle trading earnings. Tackle 25, dirty sexy money, dividend fireworks. Popular stocks in the halftime report, because we come on here and we talk and we go through our routine, but we're seeing what you guys are talking about in the halftime report, and we want to make sure that we're covering the stocks that you guys like too as well. So there's a lot to all I'm saying is there's a lot of earnings here today. I think there's like 13 or 14. So let me quickly go through these guys rapid fire style. Tim's favorite company in the stock market, CRM, led by Mark Benioff, comes out, reports $1.04 a share versus the expectation of 74 cents. Revenue came in slightly above the expectation, so a beat, officially a beat and a beat on EPS and revenue. Came in at 5.8 billion versus the 5.7 billion expectation. Revenue came in at about 20% year over year. They upped the guidance for the quarter, but the problem and the takeaway here is they did revise their guidance from a revenue perspective for 2021 to the downside. With that, you had a lukewarm report there, T, with that revision to the guidance side to the downside for 2021, especially given the fact that they upped their guidance for the first quarter of 2021. That kind of gave us a little bit of, it's always about the future until they say the current is better than the future, and then it gets really scary. And so a little bit of a mixed reaction, I would say, on their earnings, but with the guidance being lowered for the year in comparison to increasing it for the quarter, very concerning headwinds coming down the pike. Salesforce testing that 200-day moving average. Obviously, everybody knows a 200-day moving average is a battle zone for those long-term holders. Tim, you are a long-term holder of Salesforce, one of your favorite companies in the market. What are you concerned about this 200-day moving average bounce?
I obviously I'm going to be paying attention to technicals and watching it, and and it is going to be a battle. There's no doubt about it. There's nothing that concerned me too much about this report. They hit their 20 billion revenue mark for the first time ever for an annual perspective. They did raise guidance for the quarter. Obviously, the downward guidance for the full fiscal year is going to be a headwind there. But also, they just haven't closed the Slack deal yet, which I think is kind of hanging over the head of Salesforce a little bit as well.
Well, and how are they going to integrate Slack?
Yeah,
right. So to get efficient.
There's some open questions, but my thesis on Salesforce is 10 years plus. So it's not.
And my thesis on the Slack acquisition is it's a wonderful acquisition and needs time to work out.
Yeah.
Right.
Yeah.
And so, I do think there's a little bit of concern there, but the concern is in the short term. The concern is not in the long term. Is that kind of where your head's at?
That's exactly where my head's at on it.
Okay. So let the short term play out. And as an investor, you never overreact to the short term when you got a long-term perspective, right? Okay, Airbnb is next on my list. This is the first quarter Airbnb has had to report. And let me put it like this. I don't get it. That's all I'm going to say. I don't get it. What are we doing, guys?
Well, I mean,
what are we doing?
They made a lot of money.
Nope.
Right?
No, they did not.
Okay.
No, they did not.
Did they have a lot of revenue?
Nope.
I mean, but it justifies their market cap, right?
Well, they sold 1% against their market cap.
$100 billion company doing 1%.
And they didn't do $1 billion in revenue. Are you kidding me?
Wow.
But they did more revenue.
Are you kidding me?
Than they did last year.
I don't give 2 cents. A $100 billion company should have more than $1 billion in sales, in revenue. Not in profitability, because it's Airbnb. They don't know how to make money.
Right.
No, they got hammered. And yes, they did not clear the $1 billion mark. They came in at $859 million against their $100 billion market cap. They lost money and they lost a lot of it. We'll just end there. And whatever you need to say about the future, say about the future, because that's the only thing you can say about this earnings report.
Yeah. Markets are looking forward on this one, obviously, and they're buying into the hype. That's what it is.
Good.
That's all it is.
Good. Guys, I like the company, but this is batshit crazy.
Yeah.
Period. End sentence. Like, I like the company, but you don't buy this report. It's just not a good report. I'm sorry. So, but good for Airbnb investors. I am happy people are making money. It's just, wow. Interesting. I got 3 back-to-back very quickly, Tim. All very similar companies. We got Autodesk, Workday, and VM Software here. Let's start with Autodesk, ADSK. Autodesk comes out, reports 118 versus a 107. Revenue came in line. Revenue increased 15.6% year over year. I'm doing all 3 of these back to back. They lowered guidance. So Autodesk lowered guidance, and they beat and came in line. All right. So a beat, in line, lower guidance. Workday, and again, take a look at the technicals there, ADSK, a little bit of neutrality, testing support around 280. Workday reports 73 cents versus 55 cents. Workday comes in line with revenue at 1.1 versus a 1.1. So a very similar report to Autodesk. Revenue 15.9%, very similar to the 15.6% in Autodesk. Now, the difference on Workday versus Autodesk, similar numbers so far, same company, they have no guidance. So they do not provide guidance. Autodesk does. Autodesk, wide range neutrality, testing support. Workday, bullish uptrend, testing the 50-day moving average. VMware, VMW, wide range long-term neutrality. VMware comes in at 221 versus 205. Revenue comes in at 3.3 billion versus 3.2 expectation. Revenue increased 7.2, and they reaffirmed guidance. Is there anything to see here?
That is an impressive long-term consolidation.
Yeah, it is.
Good recovery calls. Good recovery
Like
calls.
people who love the chart like that, that is
the only thing that I can take away from these three companies, again, all very similar companies, is the one company that's doing really good is the one company that doesn't tell anybody of how bad the future's coming. Think about that. It's the only company, it's the one company, these three companies are identical companies. And it's the one company that does not talk about the future at all. And that's the one that's in the trend. I don't know if there's anything to take away from there. I just found that more interesting,
it's interesting
than anything else.
Yeah.
Caesars, let's move on to Caesars very quickly. Caesars, nice little dirty, sexy money candidate. Caesars had a good year so far, up from, from the year up from about 75 all the way to $90. Good, nice little 20% run for DSM candidate Caesars here. Can they hold their head above that high level of high tide water at $90? Well, Caesars comes out and reports better than expected, negative $1.70. Yes, it's casinos. Yes, it's garbage. We all know about those earnings numbers. They have been really bad for a year straight now. Revenue came in at 1.5 versus the 1.6. Revenue only declined, and I say only because there's perspective around it, right? Airlines, hotels, casinos, right? They've been really struggling, but they only went down 31% year over year. That number got a little bit bought up. It's going to be interesting. We've made that joke many times, Frankie. Well, you know what it does? It breaks out of 90. Where does it go?
Goes to 100.
Goes to
100% of the time.
We'll see if Caesars does it. We'll see if Caesars does it. But keep an eye on Caesars over the next couple of days, guys. Nice little clean trigger above 90. Pretty volatile here. Let's see how it navigates that 90 level. Maybe we can get a snap back on the intraday there on Caesars. Let's move on to space. Now I'm gonna read you, Frankie. I'm gonna read you the earnings report out of space.
Okay, I'm excited about it.
Okay, I'm gonna read you this, guys. Okay, this is a fascinating earnings report, guys. And guys, be patient with me. I'm gonna read the earnings report. So get in the zone, get your watermelon tea, get your black coffee, whatever you need. Let's do some storytelling. Okay, let's do some storytelling. If I had a good producer, Tanyan, I would have some nice little music going on right now. Okay, now there you go, buddy. I don't need the Jeopardy theme. This isn't a quiz game.
You made it a quiz game this morning. You made me guess who it was.
I am telling a story, a very important story of Space's earnings, and I need people around the fireplace, and so we can have a fireside chat.
All right, so more like a Mr. Rogers moment. Do you need a sweater vest?
Okay, there you go.
I need a sweater vest. I have a sweater vest to add on. Okay.
All right.
Okay. Virgin Galactic. They reported fourth quarter December 2020 loss of 31 cents on revenue of $0 million. The consensus estimate was a loss of 31 cents. Revenue fell 100% compared to the same quarter ago. If that doesn't scream buy, I don't know if anything ever will.
They made no
Wait a second. I just love how this is, because we all know that about it. It's Virgin Galactic, right? We all know they haven't sold anything yet, but I just love they lost 31 cents on revenue of $0 million. It just sounds funny. Come on.
It does sound.
It just sounds funny. So nothing really to see on Space. They didn't make any money because they don't sell any product. BYND does sell some product, Tim, and Beyond Meat. Wow. We had that theme, Tim, that theme this week, right? That theme of GameStop reemerging from the coffin, like the Undertaker, right? Coming out of WWE. I had some more creative analogies in personal conversations with Tim on that one. But Beyond Meat, they just signed McDonald's, bro. Beyond D just signed Yum Brands, bro. They are the primary provider for the what are they calling it? The
McPlant, which I hate, right? The name, by the way.
Yeah, but you're gonna love it in time. The McPlant. Beyond Meat Burger is the McPlant. good for Beyond Meat. Yum Brands, they did that too. Now, if Beyond Meat can just start showing a profit based on all these other headlines, it would be a really, really good company. But unfortunately, they did show a loss of 34 cents against 15 cents expectation. They came in underneath the expectation on revenue at 102 million versus 104 million. Revenue did increase 3.5%. This is all about the future on this Beyond Meat deal. Let's see how it navigates that 200-day moving average. I call me crazy, but I'm kind of interested in that 200-day moving average bounce, Tim.
You know, it's been a couple years.
I like the McDonald's signing. I do. I like the Yum Brands. Obviously they showed a loss. It was expected to show a loss, so nothing really to see there. I kind of like the signings. What do you see here on that one?
Give me the full 2-3 year chart on it from IPO to now, if you can. It's only a couple of years. Anybody who's been around the market since 2019, you would remember when Beyond Meat IPO, they came out at $45. They shot up to $240. It was a story that captured the consciousness at the time of the volatility. It's really spent a couple of years just kind of
the month pause. We were all going to be vegetarians.
We were all.
I loved that month.
Everybody ran into Beyond Meat like crazy. If you think about it, guys, they've now started to have some positive momentum around storylines and, all that kind of stuff, contracts, couple years off from that IPO volatility. I think there's something of interest here, and I don't know when or how I would play that. I don't have any positions on it at this point because the chart's still kind of choppy and messy, but I think there might be something here, Matt, long-term, once you can get a better technical chart developed.
I do think you have to get a better technical chart developed, but I do think the signing of McDonald's and the signing of Yum Brands does pique your interest in here to start looking for that specific thing. I mean, put it like this. Before I went through the earnings report, I could care less about Beyond Meat. Now my interest is piqued. I'm going to start looking at it a little bit more. It's really only that at this point.
That's where I'm at too. I'm good with that.
Yeah. All right, let's take a look at First Solar. Nice little solar energy company. First Solar comes out, reports $1.08 versus $1.27. Revenue came in at $609 versus $713. Revenue missed fairly aggressively, negative 56.5% year over year. But to offset that, they did increase EPS guidance and reaffirm the revenue guidance for the rest of the year. So a little bit of a miss on EPS, a little bit of a miss on revenue, offset by the increasing of guidance. Without the increasing of guidance, you would have had a very, very, very important test of that 200-day moving average. The future holds for today, as does support on First Solar. Kronos, nice little medical marijuana company out of Canada, comes in at medical dispensary company out of Canada. Kronos comes in at 19 cents a share loss versus the 6 cents in expectation. That they don't report specific revenue against expectation, but it did increase 115% year over year by coming into $17 million against a $3.5 billion market cap. They did beat the expectation of 13.8%. A little bit of a test here. Frankie, deeper pullback on Kronos. Obviously, marijuana has been out of favor a little bit in just the last couple weeks. Let's take a quick peek at old Mary Jane right here. You see that volatility subside and come down and testing slightly above the 20-day moving average. Canopy growth, ACB, same type of thing, testing that 200-day moving average right there around $10. Not specifically on Kronos, although Kronos might be your cup of tea, but just in general, does either one of you have any interest in these deeper pullbacks off of what was been happening for the preceding month in marijuana?
I do personally, Frankie. I don't know about you. I think technically it's still messy, but Frank, what do you say?
Yeah, I'm on the other side. Right now, it's too messy technically, so it would be a no for me. I notoriously hate these things. What I'd like to see, if I'm interested, is the Tims of the world to get whatever signals they're looking for to buy it, and then I like the pullback of the pullback, right? So we run up 2-3 days into $13, then we pull back into 12 3 days later.
Yeah, whatever.
That's where I'm starting to look to get into it. So I just call it the pullback. The pullback. I know it's probably got a fancier name than that. I do not like this. There's just too much overhead, and you win one battle and
you need to see
right
some
onto
winning.
another. Exactly, because
yeah, you need to see some winning. Yep.
Exactly. We take out, the weekly, the Wednesday high, and then we're greeted with the 9, and then we beat that. We're greeted with the 20. We still got intraday stuff. So yeah, I don't like this type of setup.
Okay. You need to see the Charlie Sheen then. You need to see winning. You need to see it go above and the retrace. You need the tiger's blood.
Yep.
I get it. Okay. Tim, but you have some interest at the low point here.
I do, because I'm approaching, this space, quite frankly, from a longer term perspective. I like the theme coming into this year. I believe in those storylines. I believe in, new access to new markets and all that kind of stuff. So opportunities around this space, I'm going to be interested in, and deeper pullbacks are. It's a reminder, you don't always want crazy upside volatility, in that regard. The wildness
because the
that
upside
happened in February
happens both sides.
Yeah, that's right.
Yeah, it happens both ways about it. No doubt about that. I have a little bit of interest here, and I certainly agree with Frank on the technicals if you're swing trading. Absolutely 100%. I don't think you swing trade on a low price, right?
No.
You swing trade you always swing trade with your team. You want your team running with you. You don't want to go against the grain, and right now, quite frankly, you'd be going against the grain when it comes to, you'd be swimming upstream on swing trading in any one of these marijuana companies right now. But don't you also, looking at it from a little bit of a longer term perspective, maybe 3-6 months, maybe more position style, don't you have cheap risk here? Isn't that the philosophy you kind of are looking at, Tim?
I think so. And however you want to map out that entry point and that addition to it, yeah, for sure. But I do think that you have assessment of cheap risk.
Yeah, and the reason I say that is wherever you're looking at buying here, if you do, that stop loss obviously goes under 9.9, which is underneath the 50-day moving average. It's underneath the previous pivot here, because if it violates 9.9, say hello to 7. Right. Right.
Yep.
So for me, and that's what does pique my interest here a little bit, is that in between 10 and 11, you can get that stop loss underneath 9.9 and still target 13, in my opinion, right? Or 15 if you're thinking about down the road a little bit, and you just have some cheap risk. Whereas a swing trade, I certainly agree with Frank, that step system 101 type stuff, after this deep retracement, break an intraday, set a higher high, wait for that snapback, and gobble it up at that point. So I could see it both ways. All right, let's move on to DKNG. Tim, this might be your earnings day here with DraftKings, right? And CRM. There you go, buddy. Yeah. Thinking about a little bit of marijuana here. I mean, you're playing your best Mark Stead this day. 69 cents on the negative, though, however, versus a 57 negative expectation. So a miss on EPS numbers. Revenue numbers came in really good, though. And so a little bit of forgiveness on the miss on EPS. Revenue came in about 30% above the expectation, which is really, really good. And DraftKings talked about that. They've seen some substantial increase in activation, in activating new accounts. And they're saying that's based on more markets opening up to more states being more willing to do legalized gambling, their marketing efforts. Remember, they are aggressively marketing from a DraftKings perspective, whereas the other ones are looking more like as acquisition. And so they're saying that marketing, and they're saying that long-term argument of legalization of gambling. It's the same argument we made in marijuana, and I'm talking we as in the market collective over the last 5 to 7 years. That same argument they kind of made again on the overnight, saying, we've seen increases in users, we've seen increases in activation, we've seen higher percentage movements based on our marketing, based on more states, based on more municipalities. And so that argument played out a little bit, and honestly offset some of the EPS and some of the current fundamental concerns about DraftKings. So I certainly understand the market buying this earnings report. I got it technically as a lukewarm earnings report. It's not a rock star by no means. It is in that lukewarm category, a miss on EPS, a beat on revenue, a little bit of NLP to make everybody paint the future as a glorified utopia of everybody making it rain. That was there. So they did sprinkle on that NLP. That gave them a nice little bump. Let's see how it handles this resistance level at 64.78.
It's the kind of report that you can confirm any one of your biases on.
Any one of your
Right.
beliefs.
Whatever
Any one of your beliefs.
What I liked about the report is it kept the pattern looking really nice, right? A little break above 65, got a little potential cup and handle working our way. We'll see if we can get there, but that's what I like about it. That looks like an interesting break above 65 to me if we can get it.
Yeah, I do think you're too tight against this and too short of a time frame beyond the earnings to really say let's trigger on a flag here. It's real choppy
I
here.
would say that personally as well.
But this price movement you're talking about here today, Frankie, that is a really consistent earnings price movement. You don't have random wicks and crazy volatility. It's a pretty consistent report from a price performance with DraftKings. And I do certainly believe it keeps that 64.78, 65 breakout. It still keeps that as legit, especially as you start looking at that over the next week on that weekly chart. Yeah. All right. So let's move on to a couple stocks that are more of the popular names, I would say. Etsy, ETSY. Etsy here reports $1.08 a share versus the 60-cent expectation. A really good beat on EPS numbers out of Etsy. Revenue numbers came in really good as well at 617 versus the 514 million. Revenue exploded year over year at $1.28, and they increased revenue guidance. I get it. And I say this tongue in cheek a little bit, but it's only up 12%. I would think it would be up more based on this report, quite frankly. You just have a lot of chop on Etsy towards the top end of the chart. And obviously, Etsy is the company that has exploded from a price appreciation in the quarter, going from a rock solid 120 all the way to 200, an 80-point price move, 40% gain on the quarter. So you had a little bit of a higher expectation. I mean, without the beats, this thing gets destroyed, but it did its performance. It did its job. It maintained price. And I think it keeps that breakout of 240 not only alive, I think you need to look at it.
Yeah,
those raw numbers are good, guys.
Good.
They're just good.
It's been a juggernaut, so that sets it up for the next breakout.
Honestly, listen, I'll throw cold water on fundamental nonsense when I see it. Etsy doesn't have that right now. Etsy came out, they proved their worth today. Give them credit where credit is due. Call balls and strikes in the marketplace. DoorDash, this is very similar to Airbnb. I want to bring up DoorDash. This is the first earnings report it's had since it went IPO. Of a wild ride from IPO in the quarter, from all the way from 190 down to 130 up to 250, pinging at 167. Find a crazier chart in the last 3 months than that. I mean, just a wild ride. And DoorDash comes out today and reports just an absolute they puked it up. I mean, they just did. This thing should have got sold, and it should get sold aggressively, in my opinion. They lost $2.67 a share versus the expectation of a negative 75, and that is the absolute only thing I need to say. Okay. So have fun, DoorDash. Now, three last ones. I got BLDR. And the reason I bring these last three up, it's not because of relevance to tackle trading or popular stocks. It's reports that I find interesting on price movement technically. Does that make sense, Tim?
Yep.
Frank. Okay. So Frank, I want to get you and Tim's take technically on these. First one is Builder First Source here, BLDR, comes out with a pretty decent report, $1.26 EPS number versus the 92-cent expectation. Revenue came in at 2.5 versus 2.7. Revenue increased 43.5%, and they increased revenue guidance. So pretty decent raw numbers coming out of BLDR. Nice response, kissing against a pretty clean breakout channel at 44. Frankie, what say you on BLDR breakout on the weekly chart, not the daily?
I say yay. I'll always say yay to that type of price movement. Very clean. I mean, this is one of those, we're greedy, right? And we would love like Monday, Tuesday, little flag, or a couple doji parties, right?
I want a doji dance.
right? I think that's what we would want, but the break itself would be very legit. Whether it was just, okay, there's, more reason to want to buy whatever's next on the trade, whether it's try to trade the breakout itself. I'm always going to like these things. My favorite thing about earnings season, one of the only things I actually like, is when things push into support or resistance and have to make that choice, right? They have to make, all right, we're going to break it, or you know what? We just don't have it. So I definitely think these guys belong in a watch list, if nothing else.
I agree. And Frankie, if we were in a strong trend and we were threatening a breakout off this type of price point, I'd say, wait, get it in the cooker. But when you have a scenario where it's been consolidating for a good 5-6 weeks and you're breaking out of that, that weekly chart is strong. And so that weekly chart supports the time frame of the breakout. So keep builder BLDR on that watch list if you're looking for that type of play. Company that nobody ever talks about and yet does some fairly consistent, very decent things from a cover call perspective is Dell Technology here. Dell reports earnings of $2.70 versus the expectation of $2.19. Revenue 26.1. I know we've been talking about some trash here today in earnings season, reporting like zero revenue, $17 million in revenue. The company nobody ever talks about, Dell, $26.1 billion in revenue versus the expectation of $24 billion. They came in at 8.7% year over year growth. Do not provide guidance. Dell breakout here out of it, some consolidation in the short term, not a great trending instrument from a swing trader perspective. And that's why you don't hear us talk about Dell, because it's just not a swing trader. It's more of a, enjoy that covered call.
Yeah.
Right.
Yeah.
So, but keep an eye on it. Keep an eye on it, because that is a very consistent, slow moving. You need something a little bit boring in tech. You need something not as crazy as tech, that doesn't fly with tech and doesn't get spanked in tech. Well, Dell's boring enough for you in that capacity. The next one, I want to see if you guys know this company, WSC.
Are you kidding me? Of course I know that. Okay, I don't know that company, but I know that pattern. I've been watching them. Again, they were one of those.
I figured you did.
Those were one of those, hey, that chart looks really good going into earnings. Don't mess it up.
and you know what? A little bit of volatility on their earnings numbers here, Frankie. No doubt about that. And understandable so. They didn't have a robust earnings report. It was kind of a little bit good, a little bit bad, a little bit nothing. 25 cents versus 20 cent expectation. Revenue came in at 437 versus $419 million. Once again, that's a beat and a beat officially. Even it's a slight beat, but it's still a beat and a beat. 57.4% increase year over year revenue, and they reaffirmed revenue guidance. A little bit of a wick dance party here today, but I think that nice. You know what gets me excited on this one, Frankie? And it stood out to me because I was just scanning technicals on earnings today.
Yep.
Look at that.
Oh yeah, I ran into these guys last week in my scanning, and I was like, oh, I can't wait to talk. And then I looked at earnings and I complained a little bit. You know, it's really cool, Maddie. If you go into your intraday, like your 30 or your hourly, I know you're a 30-minute, you prefer the 30-minute chart, kind of getting
my goal in life is to convert you from the hour to the 30-minute chart.
I don't think you're going to reach that goal. A man can try.
So everybody's got to have goals, bro.
So kind of getting a little bit of a pullback into that old resistance level. Definitely interested in these guys.
I am too. And I think it needs to get on a radar. And, you know, honestly, Frank, we're going to talk about it for a scouting report pick next week. I like it. The only thing is you need something above 28.
Mm-hmm.
Right.
As it is right now, yeah.
Need something above 28.
Yeah, as it is right now. I mean, I think if you want to just get very, very easy taking out today's high, right?
I'm thinking give me a close above 28 and let's rock above 28.50. Like,
yeah, I mean, listen, for me, my rule is a close above resistance is a breakout. Not sticking your nose up there.
You got to draw the line somewhere, bro.
You got to have your rules, right? Yep. It's not my rules or the highway, but as of right now, these guys would hit, okay, they've done that. I can now look to get in, and well, definitely an area that'll have my early attention next week.
Sure.
If it closes above 28, I'm calling that a breakout, even though technically I know it's still in the zone of resistance. You gotta have concrete mathematical rules when it comes to technical analysis. You have to, or everything's subjective, and you cannot have subjective technical analysis. So I agree with you, Frankie. If it closes above 28, that's a breakout. If it's 28.01, that's a breakout.
Mm-hmm.
I agree. But I do like that cup and handle coming into it. Keep an eye on that one. And that was a marathon edition of Earnings Roundup, but we got
Busy
through it.
day.
Everybody, listen, nobody died. We're good.
Listen, I died a little inside. It's February 26th. It's not supposed to be earnings season. And that was a slate.
I know,
mean, those are some
Frankie,
names.
I know.
I mean, it's not like you
I
were digging the
know.
bottom of the barrel. So I certainly
No,
understand.
No,
So-
I know. And look at this coming up. I mean,
I know
I'm a little sad here today because it's just that on the
It just-
chart for I'm like, oh no. Then I know finance is here and tech comes here. And,
It's not long. It's not long. I know. It seems like,
Yeah.
and maybe just remembering it wrong, but it sure seems like back in the day when Alcoa was the unofficial kickoff to earnings, it really felt like by the end of April or January, July, October, whatever, it really felt like you were done. Nowadays, it feels like the party just is never
This
ending.
first quarter has been a
Long.
marathon.
It's been a long.
It has
long
felt like
quarter.
we've been recording. It feels like we've been reporting fourth quarter earnings literally from the fourth quarter, like from that time frame. And so today was a little hot, but today had a lot of popular names in it. And
100%.
so if I didn't hit yours, I'm sorry. I picked the ones I had, and honestly, I had 14 today. So
that was plenty. That was.
But I
plenty.
figured we could cover most of the stock market if I just did earnings roundup today.
Yeah,
so.
that definitely did it.
Yeah.
Well, we got it. Now we got to have some fun, right? Take a look at a few charts, right?
Yeah, we got to look at some clean charts here, bro.
We do it every Friday. We cannot let the people down out there. By the way, I see a couple of people who are brand new in our chat. Welcome out to Team Tackle. We're going to be breaking down.
For those of you who are new, no, I do not usually talk that long about earnings, but today was earnings roundup.
We're going to do a bunch of swing setups right now. So Frankie, maybe a couple, 2, 3, something like that.
Okay, yeah, let's look at.
Pick your best. Give us some good ones.
Let's look
Give
at
us
a couple.
3, Frank. I like the number 3.
All right, number 3. All right, let's look at Johnson Controls first. JCI.
JCI, yeah. Boom, high base.
Little high base.
Catch the 9.
Catching the 9. Probably, would you say? I mean, probably looking at the break, you think you could play off of today's high?
I don't know. I was just thinking about how I was going to describe a high base to somebody new.
Just think about it where it doesn't want to go up, but it doesn't want to go down. It's just kind of hanging out in a really tight range up towards the top. We're flying high like we are here on Johnson Controls.
See,
could be a lot of reasons, right? Why someone would take profits, but they're not.
Oh, well, no, you're right. What I was going to say was they just got on a bench with Forrest Gump and hang out and had a conversation for a few days. And that's all that happened here on JCI. And I like that. I like that. The 9 EMA caught up to it. The bus showed up. Let's ready to rock and roll with the breakout here. I like it.
Just waiting for more friends. Just waiting for more friends to join the party.
More friends.
That's right.
Yeah,
that's right.
Now real clean and really organized. So there's
we all need friends, bro.
We all need friends.
I like the high base there.
So yeah, nice, clean little high base, always something that you like to see. What about a snap, no pun intended, back rally on Snap, Tim?
Little Snapchat, snap back, Cody special. What say you, T?
I think the only challenging thing here.
He wants to veto so bad already.
I love the company. I believe in the narrative around its profitability now. We've talked about it.
You love Snapchat?
Not as a product, but they've been doing some good things. Look at the stock performance over the last year. It's just a
wait a second. Are we saying a company is good simply because it goes up?
No.
Yes.
Okay. No, I'm not.
Okay.
No, I'm not. I don't know, Frank. I just don't know where I'd put a stop loss if I'm swing trading. That would be the tough thing. So could you map out, like, where do I set
these two candles make it tough
with that big candle?
I don't think so. I mean, I think maybe it makes it easy.
Right there,
but I
under
think,
62. It's not even hard.
I think you've got a couple locations go right below. Yep, right below there. Point
right there,
A.
61.60. I would
want
say.
to give it some more room, you can go below the low that was put in a few days before the before the breakout, right? Or the day of the breakout. They're a little volatile, so I can certainly understand that side of it, Tim. Like where we're at from a price point of view, though. right? I
Yeah.
like that we're, testing, we're testing the breakout channel. I think you can go intraday, just knowing that, going intraday is, you're not getting as much, but you're getting it for cheaper, right? That, eternal trade-off. So if I can't tech, where's Cody when I need him, right? I thought for sure I'd get you on Snap though.
I do like Snap. And I think there could be a trade there. I think you do have to go down to the intraday, map out a trade in that regard. So maybe a little bit higher degree.
The trade, it does have to be mapped out on the intraday. If you don't map it out on the intraday, it's going to be a little bit more difficult. I think it starts very simply. You trigger above the high of today. You put a stop loss underneath the low of 62. Use your ATR rule, whatever your ATR is, 10% ATR, 25% ATR. That gets you underneath your resistance channels, or excuse me, your support channels at 61.30, which means you're going to be taking about $5 of risk. On that, from an entry to a stop loss perspective, T1 would be up into here, right into that 70 to 73 channel. T1 would give you right about a $5 return. You got a 1-to-1 reward to risk ratio at T1. T2 would be $80, which gets you more than the 2-to-1. It's a decent step system trade. It's just you know what you're getting with Snap and the volatility. It can get blown up any second, but it's a good trade. Doesn't mean it's not a good trade. It's a good trade. But that's the trade. I just mapped it. That's the trade.
So yeah, I would overall agree with that. What about a little bit of a pullback on KKR?
Yeah, this standard bullish retracement setup with the trigger above 46.
So we've really built up some support throughout the course of the week, right? And today's upward movement may be giving us a little bit of inclination that buyers are sold, right? Over in the
they were front running that earnings like it's nobody's business, to the point where, like, against the personality of the stock.
It was an interesting run up into earnings. Yeah, so definitely I like where they are, and I like the way that they've behaved this week. I think today's candle is a good step for them.
Tim, since we have a few new people in our community, can you please take a moment to teach the power of 38.2% retracement against the previous wave?
No, but I did know you were going to draw a fib the second I saw that chart. I knew you were going to draw a Fibonacci.
Of course I was. Those are 38. Those are Goldilocks.
I get it.
Even you can see a Goldilocks.
I get it. Listen, if you want me to explain Fibonacci,
I would like you to talk about a 38% retracement.
Sure. There's a lot of participants in the market that believe in fairy tale mathematics called Fibonacci retracements and extensions and all these kind of things. They arbitrarily draw lines from different places and different pivots to fit their investment thesis. And this is an argument that we've been having for 16
a long time. And I understand your point, and I'll just say this in response. There's also a lot of people that make a lot of assumptions based on things they don't understand, don't know, and are not properly educated on.
Ouch.
You hate Fibonacci's. That's all this is about. You need to admit it finally. Come on, admit it. You hate them.
I've been admitting that for 16
You
years.
hate them. You just hate them.
Listen, you use Fibonacci's correctly. I've just seen way too many educators use Fibonacci's incorrectly to try to just paint whatever pictures they want to do.
Too many educators use lots of versions of technical analysis incorrectly.
I get it. It's just a pet peeve. It is a trigger point.
I'm with you on that one. And I certainly do agree. And for those of you who know, Tim and I are just joking around in this conversation. That's all that is. 100% joking around. We've had this version of conversation on Elliott Wave and Fibonacci. Ask anybody in our community, because I actually like Fibonacci retracements. Tim hates them. But I do agree with Tim that Elliott Wave and Fibonacci are not as a viable technical analysis as they once were.
It can aid to somebody's analysis if you use it properly. I will admit that. But yes, I do also admit I hate them.
Yeah, but can you also admit it's a better form of analysis than the made up nonsense Wall Street does?
100%. I'll give you that.
Okay. At least we're drawing something. Like,
there's relative to this.
Listen,
all right.
It's a little bit better. Okay. Let me just put it like this. It's a little bit better than just saying this. Draw a circle up here, call it the moon, and say it's going to the moon. It's better than that.
Jonathan has a really good point. Whenever you bring up a Fibonacci, I think we have to look at the VIX. Let's bring this up.
We were having so much fun too.
Oh.
If Tim wants to run the show, he can.
No, Frankie, as always, Team Tackle, by the way, out there, I know that this is one of your favorite times of the week, coming to getting some of Frank's charts at the end of our show on Friday. By the way, if you love it that much, go follow him on Twitter. He's posting all kinds of great charts throughout
Yeah, you do
the
a great
entirety
job
of
on
the
Twitter,
week.
Frankie.
Appreciate it. Always enjoy. Who doesn't like sharing charts with people? Not any trader I know. So yeah,
charts.
You're always welcome at Tackle Trading. Come hang out with us. It's fun.
Yep, I agree.
It even got me to do social media, which is not an easy thing to do, as Maddie will attest to.
Back on the S&P.
But you do such a good job of it. Like, you do a fantastic job. I love your Twitter account on Tackle Trading, because it's
good content.
You know what you follow for,
yeah.
and you're consistent with that follow.
Yeah,
it's really good.
Yeah,
appreciate it.
Content. Let's wrap up the week here, guys.
By the way, I'd like your retracement, Frankie, on KKR.
Yeah, it's shaped up pretty nicely, right?
Yeah,
it's looking good. Yeah, it's looking good. Matt, final thoughts.
Everybody go read Elliott Wave Theory, and we can have a very good conversation on Elliott Wave next week.
Ouch. That's
I'm
not
kidding. Don't do that. Don't do that. Have a better weekend than that, ladies and gentlemen. No, I kid. No, guys, it's been a choppy week. It's been a choppy week. And we talked about the importance of today. These can be really good buying opportunities, but it's difficult to do when you're in the face of the dragon to a certain extent. I mean, yesterday was that first day we've seen where literally everything in the market was red. From a trend and a pattern perspective, there's context to that. Energy and industrials and, finance are all overextended. So those red days yesterdays were just simply pullbacks and profit taking, but that's not what's happening in communications and discretionary. And these two specific sectors, I mean, don't get me wrong, if discretionary and technology specifically violate those support levels, if the S&P and the NASDAQ violate those support levels, energy, finance, basic materials, and industrials will be caught up in that sell-off. You saw it yesterday, and that's the indication. But what happens in those environments? Well, these areas of the markets that are really, really strong, the only thing that happens is they come into major support levels. On energy specifically, it would be around 45. On finance XLF, it would be around 31.5. And so even if the NASDAQ breaks, I don't think this market is disconnecting it, because all you're going to see is retracements in some of the more not aggressive, but more powerful areas of the market today. And so let's keep an eye on some very important charts in the short term. And it's not these minor levels of support on finance and energy. It's really going to boil down to what's happening with that support level on discretionary at 159.20. On technology, or you're looking at that support level right there at 129.50. And in the broad market specifically, we wanted to see that doji. We got that doji. That's the first thing you want to see coming into that week. But you're not seeing strength coming off that. Keep an eye on these support levels. 3,800, you now got a low tick underneath that at 3,784. Those levels get violated, it could get a little ugly in the market next week. So you got to keep an eye on that, but that has not yet to occur. So do not let the headline news out there change your perspective on the marketplace. Finance, industrials, energy, basic materials, the theme of the market that's been very powerful from the election on is still intact. We got through a week with the Fed, and what did Jay Powell say this week? Are we nervous about interest rates?
No.
Has the Fed raised interest rates?
Nope.
So let's not let those spoiled little whiners on Wall Street tell us how we should assess inflation. And so I'm not concerned about interest rates, because I don't care if the basis point goes up a little bit. It doesn't impact a $22 trillion economy, and it doesn't make your thirst for yield in the bond market that much more when you get 1.3 versus 1.1. That's silly analysis, quite frankly. When the Fed raises rates, that's when we get truly concerned about how interest rates. When the Fed starts telling us they're going to taper their $120 billion a month in QE, which represents 7% of our annual GDP, it's at that point we get concerned about interest rate and monetary policy. If we're not passing a $1.9 trillion stimulus package to the House today, that's widely going to get support in the throughout the political process over the next week, it's at that point we start getting concerned that this house of cards falling down. We do not get concerned when it's relegated in one area of the market that's been a high flyer for a very long time, that in that specific area of the market, I've been saying during earnings season, the price performance has not been indicated of what's been going on in earnings. You're seeing a shift there. So let's not get caught up in the fear mongering of the world right now, simply because the market went down one day yesterday. Let's have some perspective. You have some very important short-term test of support levels happening right now. You need to be aware of it, and you need to be consistent in your application on a daily basis. But it's nothing more than just a short-term test of support. The market is not disconnected. You have very strong trends happening in the market right now. You're just simply testing some key support levels. And if those support levels are violated, you could see the market go down another 3 to 5%. That's in the cards. But that's in the cards literally every moment of any historical scenario in the stock market. And if you can't withstand that, you shouldn't be in the stock market.
Well said, brother. I got nothing to add to that. I'll tell you that, Frank. That was really well said, Matt. Appreciate the insight and the thoughts there. Mark, maybe some programming notes, though. I know that you've got your show here in an hour. Why don't you
in about an hour, going to go
going on
commodities, right? Like we had a breakdown of supported gold. What was you guys' take on gold?
You got punched.
It's ugly.
Got knocked down.
Yeah. Talk about, like defensive strategy, stuff like that. Going to talk about commodities. And then, of course, mind of the trader at the closing bell, go over any last minute trade ideas, adjustments, it feels like an adjustment, end of the week type thing. I know that's what I've been doing this morning, but well said. I'm glad I popped in right there, Matt, because I thought those words were perfect.
I don't get a lot of soapbox moments, but Tim gives me about 30 seconds on a Friday afternoon. I thought I'd take advantage of it.
Well, those were a good 30 seconds, and and well said, Matt. Well said. It's. I agree. I think the larger themes are intact. You just short-term price action. Just don't be over leveraged. Don't be overextended. But the themes are intact. But 1 hour pro members, mind of a trader at the closing bell. Go over commodities and then all the questions you might have.
And check in. One thing to think about in the commodity report you're going to be doing is a question we did get asked here today on the halftime report, and that is, in the short term, obviously everybody's familiar with what's been happening with gold. Nobody should be caught up in that, right? But I do think for the long-term investors, there's obviously some concern when gold performs the way it has not just today, but in the short term. A lot of people at Tackle Trading are long-term investors in gold in some way, right? Whether you're talking miners, physical, ETFs, a lot of people are. I think a little bit of an analysis on how long-term investors should handle this type of price movement in gold, I think would be valuable for those pro members.
I'll load up. That's the first thing we'll talk about in 1 hour.
Fantastic. All right, guys, make sure you join Mark if you're a pro member. And by the way, I saw several new people chatting in the chat today that are not yet pro members. We'd love to
welcome
have
out.
Be a great time to join Tackle Trading Pro. Yeah.
Glad to have you guys.
Get the reports over the weekend. Get prepared for next week. Come and join us on the back end. There is a link to our 15-day trial of our pro membership in the description of every one of our YouTube videos. So come and join us on the back end. Other than that, guys, have a safe, wonderful weekend. We will see you guys back on Monday with the halftime report. Same